How we doing, everybody? Welcome, welcome. We have a good day today. What do you mean by that, Brandon? Yeah, I think everybody closed their NVIDIA too early today, but that's just the way it goes. When you're in uncharted territory, it's always hard to know what to do with them things. I did indeed hit NVIDIA just for a second. Nothing exciting though. I just hate trading things when they're moving like that, and so I tend to stay away. Right on. Thank you so much. I appreciate that. What makes it uncharted territory is we've never traded anywhere near these levels in the past. So how I always describe it to people, I forgot I got these things on. Give me a second here. Uh, oops, second. So when we're up here, there's no data. There's nothing to trade off up here. You can do some fibs on, this ER move. There's things like that. But then something that I was even noticing on this was if you just did this was a nice move, but or an insane move, not to, it was an insane move. Not downplaying it at all. But I started to get scared buying up here, like when we're opening at this 100% fib, which was, don't get me wrong, it was ultimately the bottom today. I just get worried, that means that it is, like it's made a very, very large move, and statistically there should be some retracement. And like sure, we did get a small pullback small got 30-buck pullback today. But ultimately ended up right around the same point. Now we're up there at that same point again. And so when things are up here, I just don't trade them. It's too much uncertainty for me. But I understand people trading NVIDIA, and this is one of those ones that I'm not telling you to slap out the money calls or anything like that, which a lot of people were doing today, and thankfully it worked out for them. But this thing has reason to run, time and time again. It has proven it is performing exceptionally well in the market. Its earnings are amazing. It guides for just more and more and more. Technically speaking, the thing's likely still sitting undervalued for what they're guiding, the forward-looking guidance is. So I get people wanting to trade NVIDIA. You also have the fact that, generally speaking, things do run into a split, which they announced a split, which is in like a week and a half from now. So I get people wanting to trade NVIDIA. I fully understand it. You do need to understand the risk of trading things that are worth $1,000. You need to have slightly wider stops, unfortunately. And what people don't realize is, you say you're trying to enter some calls for a breakout up here. Realistically, your stop needs to be down here, and so you need to take that into consideration, that's actually like a $15 move against you, which with option contracts, that's very large, and it can hurt you pretty good. So hopefully that explains why it's uncharted territory to me. Yeah, Rafa. Oh, that was a good one today, huh? It was literally again just like God, what was that? Couple candles later. I think I sold my calls like here, and this happened. Classic. That's just the way it goes. Oh, we got Anth in the house again. Welcome, welcome everybody. How we doing? Hope we all had a good day today. Nice one. How'd everybody do? It's a fun one. Nice move down on SPY. I caught none of that. Yeah, I think a lot of people are expecting to move. It's always important to remember, we got a short week again, 3-day weekend. Volume was low today. I mean, we can see it up here, but we put up 35,000 or 35 million volume. That's very low volume on SPY. That's likely why this sell was pretty, exaggerated. That was a very nice move down. And this buy up was relatively easy for them. They did that big old buy up on, again, relatively low volume. So we're seeing why, some people, a lot of people like to talk about volume. We're going to touch on it a little bit today. But low volume can be great because it can make the moves a lot more dramatic and they happen with a lot less effort, And so today for me, I mean, I kind of came into it expecting a range day. Technically speaking, we did end up having a range day, but there's that really nice sell, really nice buy for that, second half of the day that did take us well out of the range and then buy us back into the range. This was kind of expected. We might see more of this week. We might end up seeing a nice move either up or down this week. But I would just kind of plan on for, continued low volume trading until the following week. As we saw based on this volume, a lot of big money was just out of the market today. Let's see if we got one of these. Uh, like you can see the volume way down here, that is well below average volume on it. Raphael, we're gonna kind of get into that here in just oh yeah, let me post this thing. We're gonna talk a little bit about SPY and we're gonna kind of talk about what you are discussing right now to start this off. And then we're actually gonna look at a couple other things. And the reason we're gonna look at those other things, I know I normally focus on SPY in here, though you do the same thing. It doesn't matter really what it is. We're going to talk about some other things because I just think there's other things on the market that, we're technically in a range on SPY right now. So I know a lot of people don't like trading those. So that's when it's worth it. Even me, you start to look more at those individual names as opposed to just SPY and QQQ when they're kind of stuck doing this kind of thing. But so with that, we'll get a drink of water and then we will get on with it. Welcome everybody, Dirty River. Happy to have you. Tonight's kind of as everybody knows, I'll talk about it a little bit. I'm trying to do just sort of a series, whatever, a few classes in a row, all about my trading style, the things that I look for, kind of building on the things that things that we've discussed in the previous lectures until you can really just see everything that I look at. And so tonight, we're doing technical analysis, just things to look for. We're going to talk about my feelings on patterns, things like that, as well as, as most of you have seen, in all of my lectures or even kind of in the support and resistance lecture, the first class of all of this, we touched on it. I like to start all of my analysis on the longer time frames. So that's what kind of the main focus is going to be tonight is doing technical analysis on the longer time frames to try to build bias. And bias can be a really bad thing or a really good thing depending on if it's right for you. And so we're going to kind of talk about some technical analysis things that I do that help me build that bias for the day or the week or whatever it may be. And I don't want people to get like, scared away all long time frame analysis. We're doing this for day trading and swing trading. because what we can do from these long time frames is kind of identify targets, identify entries, identify stop outs, all of those crucial things. And so then as we go into the day, we can start to say, do I want to be looking long? Do I want to be looking short? Is there places where I should expect bounces or rejections if I'm looking for more than a scalp? Just to a level, and I'm, hoping for some levels to break. What are those levels that I should be watching? It's, the most common questions that most of us get in here, whether it's me or Flips or whoever it is, of do you have levels on blah, blah, blah stock, whatever it is. And so we all try to send, we try to send send our charts if we can, send whatever it is. But I want people to be able to do that for themselves. Something that I always try to, emphasize, and we're going to hit really heavy when we do a trading psych lecture in a couple of weeks, is having your plan. If you're entering a trade and then you're doing your analysis after you've entered the trade, you're likely setting yourself up for failure. You'll see it when I'm posting charts in my tab, when I'm posting alerts in my tab, you'll hear it in voice chat. Flips is always telling you levels to enter at, things to look for to enter at. And why we're doing that is so you can have a plan. One of the trading rules that I send out to people, I got a little list of them. One of the big rules on it is if you feel like you're chasing, you are. And so don't do it. And so when we find these big important levels, whether it's, support and resistance, EMAs, trends, whatever it may be, that's the level we want to enter at. So we wait for that entry. And a big part of that is just building your plan. And so for me, I know Flips is a little bit different than me, but for me, my plans always start on the daily. Toasty's plans, Shark's plans, Tilia's plans. We're all always looking at the longer time frames. You can find really good information on the hourly. You can use, the 65-minute chart or whatever other people use. But for me, that 4 hour, that daily, that weekly, you can really take in so much information. And that's where I think a lot of people miss things. We can even use, SPY as an example. If you're just looking at, your hourly chart, you only got a few days on your hourly chart, you might be looking for some sort of breakout, and you're looking at this thinking, oh, I'm looking at like a whole bunch of data, blah, blah, blah. You might think we have breakout levels here. But maybe if you start to zoom out, and I see a lot of people post hourly charts that are 3, 4, 5 days worth of data. If you start to zoom out, you start to see this very different picture and say, oh, I thought it was going to break out, but as I look back, it has been failing over and over and over. So why would I expect a breakout here? And if you go to the things like the 4 hour, now all of a sudden, these tops start to become very defined. And you can start to say, oh, maybe I don't want to be diving into longs when we're right at those levels. And then, of course, go to the daily, and all of a sudden you see the market is struggling with this area right here. So if we're getting anywhere up there near it, that's not where you want to be diving in long. And so identifying that kind of thing that I just did right here is going to be hopefully what we cover in class tonight. So we are going to start with SPY. And talk a little bit about SPY because everybody knows that's what I trade most of the time. It's what most of my questions are about, in DMs, on trade floor, whatever it is. But I just want to point out the very, very obvious thing that we have going on SPY right now, and it's exactly what we just touched on. We are in a range. We have been in this range for pushing 2 weeks now. And people chasing the breakout or chasing the short have been getting smoked left or right. And so for me, when I look at this chart, these are the two levels. Let me remove these ones. These are the two levels that I care about right now. If we're down at these lows, I'm looking long. If we're up here at these highs, I'm looking short. I don't ever want to be the first person in looking for the breakout. I know we see it all the time. Everybody wants to be the hero and catch the breakout. I mean, I don't. a short will most of the time pay here, even if it's small. And then if the breakout comes, I'm always going to look for the retest. That's how I trade. Same as down here. Maybe we break down, but I assume most breakouts and most breakdowns fail. So I don't, I trade against I'm always going to trade against. If we're buying up to here, I'm short. If we're selling down to here, I'm long. That's just how I trade. It keeps your stops really tight because we have this nice, very defined level from these dailies. If you are, long down here and we're going to get a daily close outside of here, well, then you have a really tight stop. You aren't risking very much. You're risking way less than the people getting long here or here or here looking for that breakout. And so it all just comes down to risk reward. And for me, I'm always going to look for, the smallest risk with the greatest reward. A lot of that time, frequently, my trades are going to be 1 risk, 2 reward, 3 reward. I'm not looking for those huge runners. I'm just looking for nice little risk reward trade. Those 1 to 2s, those bread and butters that you can hit over and over and over again are really, really great trades. And those are the levels that I scalp all the time. And so on the daily, unfortunately with SPY right now, we don't really have a bias. Our bias should be sideways. And so this is something that, again, we're doing kind of long time frame analysis here. This is something that you look at this daily time frame, you basically instantly realize that, hey, SPY is in a range, so I should trade something else. And so that's what I'm trying to, teach and show tonight, is that quick analysis. We look at SPY right here. 1K has actually kind of been hammering this 9 EMA on the daily. It's obviously been a nice balance point for it the last few days. But for right now on SPY, if you aren't a scalper, if you're a big breakout trader, it's likely not where you want to be trading, at least in my opinion right now. It's just a little bit too range bound. So the people who like to hold all day and those kinds of things. I mean, we even saw the price action today. If you were just holding puts or calls and not scalping them, you got smoked for most of the day. Suddenly your calls got smoked. About the time people were starting to think, oh God, I should be flipping short, because this all happened pretty quick, market buys us up. So when we have this type of range trading activity where breakdowns aren't holding, breakouts aren't holding, if you don't like to trade ranges, it's best to go looking somewhere else. And so I have a few things that I've got my eyes on right now. I think I gotta yeah, we'll just clear this one. So Amazon is one that I definitely have my eyes on right now. And the first thing that I'm going to do when I'm doing long time frame analysis is I'm always going to look for some sort of trend. I want to just kind of identify where the trend is. If you aren't really plainly seeing it from the EMAs or the candles or whatever it is that the trend is down, then draw that trend, get it in your face so you can see it. The next thing I'm going to do is pull up SMAs. And I love the SMAs on the daily. I typically use the 20, 50, and the 200. Oh, I'm seeing a couple things. Yeah, everybody does want to be a scalper until they need to scalp. Lion, shoot me a message about my trading rules. Unfortunately, some of them don't sit well with certain people. And so it's best that I just, send those to you in a DM because some people adamantly disagree with a few of them, but they're just rules that work for me. Even though I don't follow all of them, but they're rules that work really good if you're a little bit newer to trading and just need some, cut and dry. If this is happening, I won't take a trade sort of thing. So shoot me a DM, and that goes for anybody. If anybody wants the trading rules, send me a DM and I'll shoot them over to you. But Amazon, back to this. Always draw a trend. Then I pull up SMAs and I see where we are trading in regards to these SMAs. Then I put them on the chart. And then if I like to label them. And I do have a script if anybody has TOS where you can actually just have these pop up on your chart. But I like to label them so they're on the chart so that I know that they're there and we can see them. Because as I tell, oh, can you not hear me, JB? Can everybody else hear me? Hopefully. Hopefully you'll figure it out. So if we're trading around the SMAs, um, then I am paying attention to them. As we can even see today, nice bounce on Amazon. Where we ultimately ended was that daily SMA, that 50-day SMA. And so I always want to take note of those. The next things that I look for when I'm charting on the daily, and this goes back to that support and resistance lecture that we did a little bit ago, so everybody should be familiar with this. First thing I'm going to do, I'm going to identify major tops. Anywhere where, we were bought up to it and we ultimately took a nice sell. Anywhere we were bought up to it, ultimately took a nice sell. Then I'm going to go the other way and I'm going to try to identify any major bottoms, anywhere where we hit a level and we ripped off of it. Anywhere where we hit a level, took a nice push up off of it, ended up being a nice little, well, minus that candle, nice little double bottom here. And then obviously we want to mark way down here. Do we think Amazon is going to 166? No, but it's worth it to have that on here. Then if you only have a few levels, I think it is always worth it. You'll hear me say it all the time, 1K say it all the time. Go left. Look for anything that looks like, at least in my opinion, this. Anywhere we've had big, long consolidations, I'm typically interested in those. If we drag this even further left, we can see that, these areas will frequently be important. And why will they be important? Because we know that the price was battling right here. We know people purchased a lot of shares right here. We know people shorted shares here. We know all of that. So we know that anywhere from this 175, well, I mean, all the way down 171, all the way up to 180 area, the market has interest. So we put that level on our chart. We want to be aware of these things. And then this is one, it's obviously not always going to work like this, but it's a 180. It's a nice round whole psychological number. So now we have all of our levels that we care about from the daily, at least in my opinion. I'm sure you could find some nice little sneaky bounce points, places where a single candle maybe took a big wick, those kinds of things. But we have all the levels we could possibly need to trade on Amazon today. So how would we, and I always like to give this disclaimer because when we do these lectures, this is hindsight trading. So we get to, we get to pretend that we're really, really good traders. But I want to point out, for this example, we are going to, when we zoom into the shorter time frame, we are going to, pretend that today hasn't happened. But it's important to remember that if we get, this final candle off the side of the chart, today's candle and +1, all of these levels are from before. So if you were going into today to trade Amazon and you wanted to trade Amazon and you were, as you should be, looking for a bounce at this 180 level, we have all of this information. We have this previous range here. We know where our major lows and highs have been in recent times. So then, and this is all information, we know where our major SMAs are right now. This is all information that we had going into today. So if we zoom into that short time frame, we had two levels on our charts. They ultimately ended up, being 30 cents off of a bottom tick, and they ultimately ended up being the top tick. It is never, ever, ever going to always work like that. But this is a day where we could have come in, said, we're buying that dip to 180, maybe we enter a little bit early, and our stop is maybe, a 5, a 15, a 30-minute close down in this gray zone. So if you take this, the pullback down, that double bottom, very, very nice trade for you. But this is all from information that we find on those daily time frames. Anybody could have done this, we just got a few levels. And then the second part of this, we have our major levels. So you can always take note of, things that I always look at personally, those pre-market lows, those pre-market highs, all of those things. We can even see it on this one. Pre-market high ultimately ended up being very important today. So that's another level you can put on there. Obviously, that's going to be from the shorter time frame. But if you don't like trading those pre-market levels, we know that we have a $3 move right here, give or take, I'm rounding, on Amazon. that is too big to not have targets somewhere else. So, how I personally like to find those like intraday targets is go to the 4 hour. Again, using that longer time frame. So, a level that I'm going to add, obviously, this one ultimately ended up finding support here for a couple of days. Another one, we do the same thing we do on the long, on the daily time frame. You do that on the shorter, 4 hours, still not a short time frame. You do that on the shorter time frames as well. Next one we're going to mark, obviously, right here. Amazon took a big bounce right there. Got $4 bounce off of that one. So obviously, we're interested in that. And then again, keep going left. Where can we see, big 4 hour reaction candles? Obviously, going to ignore this one. Earnings, this is our earnings move. But just keep looking left for any sort of, are we missing any bounces, anything like that? As we go left more and more and more, you guys are seeing that Amazon was just an awesome trade today. We zoom into the short time frame, entry is here, first target is here, second target is here. Now you just have your stops above entry, and if you let it run or you take this big old move, we have targets that are not chases, anything like that. Obviously, you put pre-market high on there. Here is your entire move to the upside laid out for you. You could have had every single one of those levels from the longer time frames before today traded. So does everybody get that? Raphael, good question. The volume profile, yes, it can. However, when I use volume profile, which is rare, I like to, you know, I like to take it with a grain of salt because the issue is those big nodes, where the volume is stacked up. When those break, you get obliterated if you're trading against it. So I always just like to look at my levels. It is, volume profile is nice. It shows you where a lot of things were traded. But it can end up being a little bit aggressive, if it goes against you. So that's why I'm a little bit careful with that. Yeah, Rudy, 50 SMA. I mean, if you've caught, and like, again, this is hindsight trading, the chance of us getting lucky like this, not holding through this huge drawdown, none of this, but you hold these contracts, maybe you're a swing trader, you bought time on them, you hold these contracts, you should be trimming most of your position right here because this is a very, very likely at least pullback point. So booking those profits always going to be a good idea. Above this, again, next target going to be trend. We already have that. If we happen to break the trend, next target is going to be that 20 SMA. So it's 20 daily SMA. So for SMAs, I rarely use them on the 4 hour. I really like them on the daily, and the 20, 50, 200 are my go-tos. Let's see what this one looks like. So sometimes, because see, this is the 200 and this is the 50 way up here, sometimes it's worth it to slap that 100-day on there and see where the like quarterly buyers might be sitting, because that's going to show you basically a quarter of trading. If you put that 100-day on there and say, are the quarterly buyers still up? Because what these lines are basically telling us is, if you've bought shares in the last 50 days from today, you're technically red on your shares at this point. Based on the average price. Same as the 20-day. If you bought shares within the last 20 days, and we can see it here, you are red on your shares. So that's what that's showing us. So 100-day, if those quarterly buyers are still happy, it can be a nice kind of middle ground for you. But I mostly look at the SMAs on the daily. Consolidation, I said I didn't put a level on there, but it'd be 170, 145 is where I would personally set that consolidation. JT, how much does the TTM squeeze factor in? So I'm not a user of the TTM squeeze. It's a good tool. I will say that the only person that I have seen use it very, very effectively is my brother Mad Flips. That's just something that he's really learned to read well. But for me, I don't think the TTM squeeze shows you anything that volume isn't already showing you. Yeah, this trend line will stay here. This trend line stays here forever. If we look at my SPY chart, the one that I use every day, If you start zooming in, there is trends everywhere. I always leave trends, I want to know where we're trading in the market. So I got all kinds of trends, all kinds of levels, I always leave the trends on there. And then on something like Amazon, and sometimes they can get a little funky when you go from the daily on in. So sometimes I like to put my mouse over there and make sure 182.30 is about where we want it. And see it's bumped up a little bit. So I just like to be aware of where these trends sit anytime I'm trading. Because they tend to matter. Okay, so that's Amazon. And so not only have we charted it, looking at mostly those longer time frames, we've also built a trade plan on it. We don't necessarily want to be diving in longs, but if we are getting long above the 50 SMA, we're obviously targeting the trend in the 20, or if we get up to that trend and we're looking for a rejection, we're looking for a pullback down to that 50 SMA. Next one we're going to talk Apple. Apple been putting in real nice moves. Obviously didn't hold on the back of that news at all. We finally had the 50 SMA crossing up, but off the back of, earnings, had a really nice run from there. And so nice move so far on Apple. Some things that I am watching on Apple, we're going to do the exact same thing I said as last time. Identify any major trends, major ones down here. We also have another trend here. Super ugly, but I like to take note of those. The next things that we want to do is mark any major highs that we see that are, somewhere near where we are. Obviously, double top played nice today. Any of these major highs, you always want to be interested in. Next thing, and we can mark all these down here, but I'm not necessarily interested in those levels is the reason that we aren't. Next thing you want to do, look for any of these major lows. Again, they're so low below us that we don't have a ton of interest in them. And then again, just keep looking left. Here's a nice little big bounce off of this candle here. Always looking for major reactions. We can look for consolidation to identify if we're trading in consolidation areas and mark the edges of that level. But when we're on the daily time frame and we're marking things, like here was one kind of hidden behind my SMA right there. This top right here, I am not trying to tell you that at 191.08, that is what caused Apple to sell down, got the $25 or whatever. But it is worth noting that this is where bulls ultimately gave up. And so we can, somewhat expect a reaction at that level. And so that's what I want to do. And so again, same thing as we did on the last one. We have our levels. We know what matters to us right here. Now we trade around it. So if we zoom into the 5-minute, we want to look at our levels. Again, none of these are based off of anything from today. So we had all of these levels today. Obviously 190 going to be a big one. However, we can look here and see that our next major level down is 187.35. And as we're learning, and I'm trying to teach all of you, you want realistic price targets. If you enter Apple short, don't expect a $2.70 drop on Apple, Do sometimes you get them like we did today? Absolutely. But Apple likes to do a lot of this kind of movement, maybe give you a buck bounce or whatever it is. Apple doesn't love to make huge moves. So we know we need a little more information right there. So the first thing I'm going to do, go to the 4-hour and look at any sort of consolidation again, or major bounces that we took and see if any of those levels matter. So right here, obviously we have another, we had some major consolidation right here for 3 days that ended up bouncing us pretty nice. Right down here, we took a big rejection down. So now we can look at our chart and say, okay, we actually have a couple levels in this area. Here's a nice, another big bounce. I almost just missed it. All of a sudden, we now have downwards price targets if we think the market is going to move, all from longer time frames. We can see here a bunch of 50-cent moves down on Apple is basically what you're looking at, and those pay really, really well. However, we're at 190. Again, we want to have reasonable price targets. Maybe this 191, that one's, a buck is reasonable enough, but something that we're going to take from today is going to be right here. To me, this was a nice big breakdown area. It was the breakout candle that ultimately pushed, followed by the failure, big sell, big rejection here. I'm interested in 192.11. If we are looking to be long, these are my levels long. These are my levels short. and other than one, all from the long time frames. And so, how would we trade this? Going into tomorrow, 190 is our line in the sand. You can look to be short below it, you can look to be long above it. That's simple, that cut and dry, all from those major longer time frames. And so I do think Apple is one that it's worth having our eyes on here. If we get this breakout, of course, we're going to have continued upside. Or maybe we want to pull all the way down to the trend, somewhere down here, 188 area, and maybe we want to get long there. Maybe we think we're going to break the trend and we're going to go try some of these lower lows. There's a bunch of trading opportunity on Apple right here. I don't, it's worth noting that we are technically in a range. It's a $5 range, which is big on Apple. But that just plays into our rules of we want to be long at the lows of ranges. We want to be short at the tops of ranges. And so for me, Apple just offering great trades, short, long, all over the place. It's back up to that 190 value, so it can put up some nicer moves than it will at, say, 160, So Apple worth having your eyes on. How do I click and mark the price? So I'm actually double clicking. Because if you click once on Thinkorswim, then it moves around like this. But what I like to do is just get my mouse over where I want it and click twice. And that'll leave the line there for you. Because if you only click once, it drags around. So everybody's seeing what we're seeing on Apple here. Long or short, doesn't matter. Both likely have a nice chance of paying. All analyzing from the longer time frames. Hopefully everybody's getting it. Rudy, thank you. So last one that we're going to talk about is going to be AMD. As everybody knows, Flips loves trading AMD. Thing can move. It's a cheap stock that puts in, well, cheapish stock that puts in way bigger moves than you would expect. And I do think where it's trading right now definitely has some opportunities on both sides. So again, we're going to do the same thing. Obviously, this was the trend that then broke. This was the new trend that then ultimately ended up breaking. That's the one we talked about in class here 2 or 3 weeks ago. So we have our trend there. We also have another trend here, which is, lining up with that 50 SMA, which obviously we care about, lining up, we got candles bouncing off the 20 SMA, which obviously we care about. So we have a confirmed broken downtrend. We now have a confirmed uptrend because what we're learning is we're setting higher lows here, setting higher highs here. So now we do the exact same thing that we do on everything else. We look for any sort of major top. That was obviously a major top. Major tops up here. Missed my click there. Major tops up here. And a major top way, way, way up there. Then same thing on the bottom. Major lows. Any major low we got, we want to check those, make sure we have all of these covered for us. And then very final thing I'm going to do is just one more trend to just kind of show that, it is broadening. And why I want to show this is I don't trade named patterns. As most of you know, I've talked about it on Trade Floor, I talk about it in lectures, I talk about it in things like that. As most of you know, I don't do the bull flag, bear flag, inverse head and shoulders. I just don't trade any of those. As you trade longer and longer, you will see more and more failures out of them. I don't remember off the top of my head what the success rate is, but on like a bull flag, the success rate is something like 60%. And that's just pretty low odds. The only, and I named pattern, if you can call it that I really focus on is double tops and double bottoms. Because they work. They have a high success rate. At the very least for a scalp, they will almost always work for you. Again, I'm not remembering the statistics of how frequently they work, but they work very, very well. And so for me, I've seen way too many bull flags dump. I've seen way too many inverse head and shoulders dump to really care about that. People try to trade rising wedges or falling wedges, and there's a very fine line between a rising wedge and an uptrend and a falling wedge and a downtrend. And you don't want to be caught on the wrong side of it, because there's people out there that for sure they were saying, oh, AMD falling wedge. And did it ultimately break up? Yes. But if you started trading this falling wedge thinking it's a falling wedge, you rode AMD, I mean, $80 down, $90 down before that falling wedge worked out for you. And it's like we saw here, we had a trend, we had another trend, we had another trend, we had another trend, and then this was the one that finally stuck. So that's why I don't trade those kinds of things. And so that's where I don't really like, that's why I personally don't care about him. You won't, hear me saying that. But you will hear me say things like it's consolidating between trends. And so, I mean, somebody might look at this, and like, I'm not going to say that they're wrong, but somebody might look at the AMD chart right here and they might call it a bear flag, Maybe this to them is the flag, maybe this to them is the pole, which it's not wrong. I won't say it's wrong, but to me, I look at this and say, I look at this and I say, well, we're breaking downtrend and we are now setting higher lows. So AMD is now in an uptrend. So how I treat them is I treat them as two trends and I treat it as consolidation or a trend or whatever it may be within these two trend lines. And for me, on something like AMD, if we're pulling down towards this trend, I am way more interested in getting calls and not trying to play it as, some sort of breakdown out of a big bear flag. Same as up here. If we're start pushing up towards this trend, I'm way more interested short than I am long. And the reason for that goes back to planning our trades and saying to ourselves, where is the better risk reward? Is it at the trend that keeps rejecting? Do I want to get long there trying to catch the breakout? Or do I want to get short with a very tight stop and stop when I'm wrong and look for a retest for the breakout, which will probably pay just as well as catching the ultimate, the breakout in the beginning. So that's why I don't do, in my technical analysis, I'm not a pattern person. If you are and they work for you and you figured them out, great. But I think that there's just more information to be gathered from, looking at the chart, looking at those bounce points, looking at those rejection points. And, the market likes to do the same thing a bunch of times in a row. So that's why I'm never the one, trying to buy the fourth top for the breakout because I think it's coming. I'm just trying to short it. Maybe I catch a nice drop or I get stopped out for a small loss. So on AMD, again, where we are right now, I don't love an entry. I do love an entry. If we push up here to this trend, again, we always want to look left. Big previous consolidation zone, going to be lining up pretty dang nice with this trend. So this is opposite of the other consolidation zone on Amazon that we talked about where we're pulling down to it, looking for a bounce. This time we're buying up to it. And this was long consolidation 2 weeks before ultimate big breakdown and selling. So to me, if we push up here to this 176, 177 area, I think that's going to offer a very, very nice place to get short and potentially, catch a nice little rejection back down to this 173 area. You aren't going to look for something huge. Maybe we ultimately break down to this trend, but who cares? We're just trying to catch a chunk of the move if we can. If we break out, if we reclaim this consolidation, we can look to push some longs on it. But for now, that's where I would be looking for a rejection. Obviously, you want to be careful. Jumping in front of the chip bull train can be just a death sentence for you, but definitely something that I'm looking at. On the flip side, and I'm not going to say AMD is going to pull back $10 to this 160 area to give us another entry, but I definitely love it for a bounce if we are able to pull back that far. Even today, if we take note of this daily SMA, very nice entry off of it, likely. Oh, let's see, we got a couple of messages. I'm trying to follow this. Yep, answered that one. Yeah, Raphael, you're right. A double top or a double bottom is generally just a rejection of resistance or a bounce of support. And so since I trade mostly support and resistance and double bottoms and double tops typically line up at them, it's a very great place to take that, counter trend risk. Yep, Stephen. I mean, I can't go as far as to say always, but I would completely agree that a lot of the time before a big moves in the market, depends, up or down, you will frequently see a double top or double bottom, for those reversals. Because it's the market deciding, am I ready to break down or or break out, whatever it is. And so it's a statistic I teach all the time. 80% of breakouts fail. So I use that statistic to my advantage in my trading basically every single day because, the market doesn't want to break out and doesn't want to break down. It spends most of its life in a range. So for me, I just trade those ranges, and double tops and double bottoms tend to work real well in a range. So that is AMD. Final, I forgot I have one more that I want to talk about. My favorite one. AT&T. Nice short on it. Today, I only caught a little bit of that move, unfortunately, but this is a great one. I guess we can just kind of redo. Let's do a new one. Everybody knows I love to trade AT&T, and everybody knows every time I alert it, I get blown out of the water, except the last one. So AT&T, uh, you know, definitely a range-bound trader. And when you analyze it on these daily time frames, we need to take those ranges into consideration, because something like AT&T, it might look like it's putting in a big move, but this is a buck 50, So we trade these kinds of stocks a little bit different. Generally speaking, we trade them within the money, because that smaller move, you want a higher delta. So we're going to analyze AT&T, same as we have done every single thing else. Mark any of these major tops that we have, because we want to draw a trend. Mark any major tops we have. Mark any major lows that we have. We got a couple more tops over here. And this picture starts to be painted real nice for us. Here's a nice one right in the middle. And then obviously we want to mark our SMAs. We'll label those again. And then I just do DMA. It's the daily, moving average for anybody that's curious, just to make it easy on myself. And then again, mark this one here. And so picture starts to be pretty obvious up here. We're getting up here to this trend. We're getting up here into all of this resistance. We did break through it and we're holding it. That 1750 area, really, really great place to get short, because the risk is going to be nothing. Your contracts might lose $2 or $3 to short this thing. If the breakout comes, look for that run up there, 1788. Nice. However, short looking really, really nice here. Now we go back, and for anybody, the 1750s did something like 200 or 300% puts today on this little move. So now we look at this downside. We're in the bottom of this range. We're at this daily 20 MA. So we want to be looking long down here. Obviously, target's going to be this upper trend up here if we can get that kind of a move, but we want to be looking long off this 1720. Again, tight stops below you, risk 5-6 cents of a downside move. Your contracts will lose $2 or $3, is it? And look for that bounce. If the bounce doesn't come and we're kind of holding below this 1720, you can absolutely risk that short down to 17. These 1750 in the money contracts are going to be costing like $25. And if you get another 20-cent move down to 17, this other moving average, that's going to pay you 50-60% on the contract. So AT&T, very, very tradable location right here. Even if you want to buy the next week contract, still very, very cheap. It moves slow. It's not, today was a funny one. It did sell for most of the day today. But normally it does, nice, good move early, and then you get a bunch of consolidation. So nice, slow mover, very friendly to ports. Losses tend to be tiny if you take them. And really, really, really respects technicals. And so that's why I love trading T. As we can see down here, again, if we get to 17, I'll get longs. We break below 1720, I'm short to 17. We hold 1720, I'm long to the trend. Very, very tradable chart right now. I love where it's at. Because of what it is, because of how it moves, you do not want to chase AT&T. The contracts typically have pretty low volume, pretty low open interest, so they can have a spread on them. So you don't want to market into it, and you really want to wait for your levels to enter. Because we only have 20 or 30 cents a move to play with, Every one of those cents matters. So if we touch 1720, that's where you want to be getting long. You don't want to be getting long 1727, 1730 because you've given up, a third of your expected move that you want. So very tradable location, but very important to be patient on the trade. Let it come to you and just trade it. Let's see, a question. Oh, Kermit, great question. People ask it all the time. So there's two ways to look at it. When I chart pre-market high and low, I include all of it. I think of it all as one. Technically speaking, this is after hours, this is pre-market, or this is after hours, this is pre-market, sorry. After hours pre-market. I want the highest high and I want the lowest low, whatever it may be. Those are the levels that I care about. I treat it all as one. There are some people that they do the pre-market high, the pre-market low, and the after hours high and the after hours low. In my experience, you just want the highest high and highest low, and that is always going to perform the best for you. And so that's what I do. And great question. A lot of people have the same question. I think that they're levels that I personally feel they should be on everybody's chart. I actually have, if anybody ever wants it, it might be pinned to my tab. But I got a little script that charts it for me, and it does the same thing. Lowest low, highest high. That's all that it cares about. And so that's how I do it. That's how I recommend people do it. If you do more than that, your chart can start to get pretty cluttered. And so for me, that's at least how I do it. And so with that, nice. We got 10 minutes for questions. I was hoping we'd have a little extra time in case anybody had either a trade idea, any sort of technical questions. Did I go too fast over anything? Go back over any of the trades we talked. And if not, thank you all so much. But if anybody's got questions, let's hear them. Or anybody got trade ideas, either or. Right on, Rudy. Happy to hear it. No questions tonight. Oh, chart meta? Yeah, you got it. Let's check it out. That thing's been on a rip. I'm still waiting for that 500 test. I got a couple of shares of that thing. Meta. Well, obviously breaking trend real nice. Slow downtrend. Ooh, nice. Then same thing we always do. 50. You just line up with that. Nice little breakout on Meta right now. We got it, that one. Let's look for some of these majors we got around here. Holding that. So I'm doing again, marking these major highs here. But definitely, in my opinion, should be looking long on Meta. I mean, it's very wide, but dips all the way down to this 20 daily moving average should definitely be bought. Don't love the long here just because we're only a few bucks, like, entering the long right here because we're just a few bucks below here. This 50 daily moving average also lining up with the start of the earnings gap. It'll be the official gap fill on that thing. At least how I trade them, it'll be the official gap fill on that thing. So that level could end up being really, really tricky. If we get above it, obviously stay long on that thing, look for some moves to the upside. But I would tread lightly getting long here. I'm not saying I'd be diving in short. Meta put up good earnings. It's something I'm personally bullish on. Getting a nice consolidation here. Look for that breakout upside, or if we can pull back, I really have no interest in being short per se. Some day trade scalp short, obviously fine on, most names, most days. But I don't really have any interest short until, really even more than the trend and more than that 20, giving up these lows right here. So for me, I'm just mostly paying attention. Nice trend break on it. Dip should be bought down to here, thought of as a retest. And then other side long would be up here. Shorts I really wouldn't look for down here or until down here personally. Can't really chart NVIDIA. I mean, I can chart NVIDIA, but it's gonna be it's not gonna be overly helpful. Great question. If you're mostly swing trading, what's the lowest time frame you'll go down to in chart and support and resistance? Honestly, like the 4 hour. I think swing traders that spend most of their time on the hourly are just missing the big picture a lot of the time. Whether it's early entries, late entries, things like that. I feel like 9 out of 10 times, swing traders should just live their life on that 4 hour or longer. Let some 4 hour candles close to know if your trade's intact, and then make sure that you're buying enough time. Because swing trading weeklies, you have to manage very, very differently than swing trading, longer term contracts. And so always just make sure you're buying yourself enough time with them. And then live life on those longer charts. A good buddy of mine, I work with him a lot. And he swing trades, but he might see this kind of stuff. Maybe this wasn't the move he wanted, and be like, oh, meta's dumping, I'm gonna stop out. It's like, well, it's just dumping to support. And so on the 5 minute, it looks scary. Well, go to the 4 hour, and all of a sudden you realize it's doing exactly nothing, and you really got nothing to worry about here. So always look at those longer time frames. If you're a swing trader and you're looking at the 5 minute, just like quit giving yourself a heart attack. At least pull up the 30 minute. Look at those longer time frames to see what the stock is really doing. Most of I scalp, so I live life on the 5 and the 15 most of the time, but still trading that longer time frame information. Oh, well, I kind of answered your question there about what time frame, if I'm scalping, what time frame am I looking for? I'm normally looking for the 5 minute. But as most people know, I like to be right or wrong very, very quickly. Give me two, three, four candles is really all I'm looking for on those 5 minute trades, or the 5 minute chart trades. And so, does that make me stop out too soon and make me sell too early? Yes. But I want the instant gratification trade. Those are what I like to trade. That's why it's so often it's technical bounces or rejections or things like that that people see me trade. And so if I'm looking for a scalp, I'm mostly on that 5 and 15 minute time frame for sure. Would I mark an uptrend there? I wondered if anybody was going to ask that. This one right here, I assume, is what you're talking about. And absolutely, but we have this kind of breakdown below it, and I'm still biased long on it. So yes, you could have played this, you could play this breakdown of this trend, but still, if you're trying to play that breakdown, then you're ignoring the bigger picture. GameStop, there's really nothing to chart there. We'll check Netflix. We'll pull up GameStop after this. Why not? Things bullish though. Oh yeah, ignore my MMA levels. Um, Wow, Netflix, actually, yeah, we talked this on last week off of this trend, huh? Was that you who asked this last week, Lion? I'm assuming these are the same levels that I was trying to tell you to, buy the break back over the trend. Because somebody was asking this last week. Unfortunately, now we're up here at these highs, so I don't love the long until we were able to break those all-time highs and, pull back. Nice technical short out that 650 with a stop over 652 could offer a really, really nice trade. But this one is falling into kind of that same situation, SPY, NVIDIA, all of those names have right now. Very little data to work around. Um, but Netflix a mover. But I'm interested in dips. I'm interested in those dips back down to that trend. If I'm not saying it's going to come, who knows if it wants to drop $20. But I'd be waiting for a break for some confirmed upside. I hope this is okay. Yeah. So GameStop, obviously, pump and dump. So pretty impossible to really chart this thing. But like, here is your previous breakout. Not saying it's what caused the explosion. I think they announced they were doing something. Here's your previous breakout. You don't want to be short, at that breakout level. Now we pushed up here where we had the breakdown level. We obviously basically filled that gap today. But this thing's a pump and dump. So you can't really do TA on it. However, there's some things that you always want to take note of, like, I mean, with this close right here, I'm not diving in short. I'm also not diving in long. If you're trading GME, you're just like gambling. But to me, very, very few levels on this chart matter right now. There's a couple of them for you though, if you are, trying to do the GME trade. But I'd be trading around these kind of levels, you know. That IV is high enough, the volatility is high enough that it is tradable, you know. Uh, but that's what I'd be trading around. And then, I mean, this type of increasing volume, I mean, we did end up with more sellers than buyers today, but this type of increasing volume on breakouts is risky business. What about for intraday trades, like longer time frame trades? I'm assuming you're asking entries on those. It's gonna still be, at least for me, the 5 and the 15 minute. A lot of the time, if I'm looking for a bigger move, I'm gonna kind of try to like time my entry, you know, like a bottom down here, something like that. What I'm actually trading lately is these fib levels. This is what I've been liking on SPY. But here's my one level I got on SPY. And so you see this basing right here. I want to be on the 5 minute to look for the entry around there, just so I can kind of, you know, be a bit more accurate. Then if I'm looking for a bigger move, just go to these 15-minute candles. You know, you get a nice push up, move that stop up to your next level and see how the 15-minute candles behave. Again, another push up, get your stop here. If you get that nice push up, obviously you should be out. But for intraday trades, that's it. Show how to set up my active trader. Let me well, I'm on my small port, so if you guys see it, it don't matter. So what I do, personally, I'm always on flexible grid. You see right up here, flexible grid. So when you're on flexible grid, you can do this. And you can pull up these charts, or you can pull up another chart right next to it. Then, I actually haven't tried this. I hear it works great now with Schwab. Say you want to trade SPY. So you type in SPY, and then you can pull this thing down. SPY, there we go. Look at that. You just type it in right here. And then I don't know. I guess these are probably expired or whatever. But there, you pull up the SPY. Now you have what this is the option contract chart. So you don't care about that. You go chart, you go active trader. There's your active trader. You can buy, you click on the left-hand side, buy limit. You click on the right-hand side, sell limit. And then I trade exclusively with limit orders personally. And so when you click your sell limit here, it'll actually pop a lineup on the chart. So say you're in calls here and you want to sell them here, you can have your sell limit ready. Or say, let's go back to the 5 minute. Say you want to buy calls, you know, we're selling down, you think this is the bounce point, you can have your limit order just waiting here so that you get filled and you can catch this bounce. So really, really simple. You know, you click up here, customize grid, you get your little box in the middle. You guys might not be able to see that. Add a chart, and your active traders rocking and rolling. How do I set up fib levels for intraday trading? So those ones that you saw are actually, these fib levels are actually not from intraday. These fib levels are pulled off of the CPI candle. This one, I'm assuming that was this one. So these are the fibs based on the CPI move. And so that's just what I've been trading because that was our big move. And so I've been just trading those bounces and retraces around those levels until we get a little bit more, you know, data up in this area. But something that I've actually been doing, and you know, I've just been playing around with it, but something that I've been doing is, you know, I trade that opening range thing. So let's do so I trade the opening range, which, or you know, I trade the opening range Al Brooks teaches. So sometimes I'll pull the opening range, and then if we're uh oops, if we're looking for you know, if we're kind of looking for some sort of, you know, technical bounce off of here, I might pull the fibs and look for that 50% retrace, look for that 23, that 38, whatever it is, and just do it based off the opening range and try to catch that bounce if I can. But it's something that, you know, it works well, but not perfect. So Hunter, great question. Oh, I see it's 6 o'clock. We got people out of here. We had great attendance tonight. Thank you everybody for being here. If you got to go, thank you so much for being here. I appreciate it. You guys are awesome. Thank you. But if not, I'll answer a couple more questions, then we'll call it. Oh yeah, so stop outs. So how my stop outs, I have two. So we're just gonna put this level on here. Just, we're just gonna put this level on here. So when I take a trade, I have two stop outs in mind. Um, and what those stop outs are, one of them is mental. And so say I buy calls here. Well, actually, this one's not gonna work great. Say I buy calls here, but um, and so I get a nice bounce. Well, maybe I don't sell them. My mental stop out is a 5 minute candle close below that level. The hope is that maybe it'll just, maybe I'll get a tight stop, maybe I'll take a small loss. Or if they're gonna go below it and wick it back up, I don't want to have a hard stop there and risk getting stopped out. Well, I'm also gonna have a hard stop in place. Um, that says if we get to this, I'm out. So we'll just put a random line on the chart. If a candle even goes below this level, I'm out of the trade. So you'll see in my tab when I alert things, I'm going to say, and I've been making it easy on people and giving the dollar amount. But if you put in that stop that I'm giving, you will very frequently see that that is like the hard stop. That is where we get out of the trade. I'm typically never expecting that much downside on the trade, but if you see those stops in my tab, those are hard stops because that is the maximum I am willing to lose on that trade. I don't care if it bounces. I don't care if it proves me wrong. That is as much as I'm willing to get hurt. So mental stop, 5 minute candle close. You also always need to have a hard stop in place. How do you trade market open? I just need things to line up. I don't remember. I hit a nice trade. Oh yeah, I hit this trade on market open the other day. So go back a little bit. So market open, we were trending up, obviously chart, a little dirty, still trading those fib levels. Market was trending up, so I drew this trend. I guess this isn't quite market open. I bought calls right here, knowing that my stop is any sort of aggressive selling below this fib level. And so we had the nice trend coming up. I don't remember. I got filled somewhere around here. I was down a little bit on the trade and instantly take the bounce. This was something that lined up where I had, in my mind, an important level. I had a second attempt of a broken trend, which I typically don't think is going to break. And then strong buying in the market. So I had a few things lining up for me. I had the EMAs overhead, which I didn't like, but they were the price targets. Those were where I was going to be trimming, was into those EMAs. Then the second we're over the hourly 20, I held that trade a little bit longer and made a couple more bucks. Another thing I'll look for off the open is, nice, we had one soon, downtrending. So we got this nice downtrend happening. I am short on any bounce. If we see green up to here, great. I'm shorting this thing and my stop is right there. I got, in my mind, what's a big level. We've had selling all the way into market open. I know that if I enter here, my stop is super tight. So I'm below EMAs, I'm below trend, I'm below level. Any bounce gets shorted. I just need things to line up just like any other trade. The thing that you need to be conscious of at market open is when you have like, let's see if we got any. I can't really find a good one, but the thing you need to be conscious of at market open is that you can have, I guess this is an okay one. This was a very ugly red candle at one point. And then it became a nice bullish green candle. So you do always need to remember that if you're shorting this thing, even because, oh yeah, because, here's the trend or whatever. We're below trend, we're below EMAs, we're below blah, blah, blah. So you short it right at the open. You see that money. The second you're wrong, admit you're wrong because these reversals off the open can destroy you. How long till this is posted in lectures? Sometime this week. Give it a few days. I know Joe's been busy. Steven, one of the most important things that I recommend to everybody is size down. If you can lose less, then you'll have more time in the market. And so the two most, like what I tell people is like, you're planning your trade. you need to know your entry and your stop out before any trade. Who cares about profit? Profit comes. You need to know exactly how much money you are risking on a trade. And, you need to know exactly how much money you're risking on a trade before you enter that trade. And if you know the risk, then your emotions get out of the way. Like that is the best advice I can give anybody is plan that trade and plan your entry and stop out. Don't chase it. Only take your entry at entry and take your stop out at stop out. No questions asked. There's like, if you're in a trade, if your trades are frequently going, minus 30, 40, 50% before you go green, you need work on entries. There's like I see it all the time with people in here. They enter a trade, they don't enter it where I would have entered it, and then they ask me about it an hour later, and I'm like, "Well, why didn't you stop out here, here, here?" And they're like, "Well, I didn't, I thought it was going to bounce." It's like, "Well, you need to know ahead of time where are you admitting you're wrong." Because if your trade goes down 40%, 30%, and then it goes green, that was a bad trade. Like I'm happy you made money, but if all of your trades go that red, your entries are bad, and you need work on those. And so that's what I tell any beginner. Size down, practice entries and stop outs. I don't know what you're talking about where I hypothetically bought calls. Was it this one back? Was it that one we talked about earlier? Oh, this one. I mean, I bought them somewhere right around here. Yes, we're below trend, but second test of trend, blah, blah, blah. So I bought them somewhere right down here. As close as I could to where my stop out was going to be. I mean, honestly, Rudy, I love just buying SPY. You can put a little bit of money into some of those like growth names if you want, but focus on SPY, QQQ, VOO, whatever it is, and just let those things run. You'll never be sad in 20 years. Do I know what my previous EMA SMA lecture? Probably soon would be my guess. Joe in here is in charge of doing it, and I know he's been super busy. Um, uh, so give him a break, but he should be posting them pretty soon, I would think. Yeah, Rudy, no sweat. But just keep adding, that's the thing about 401ks or IRAs or whatever, if you got one and you can add to it, just add to it and forget it's there and be happy in 20 or 30 years. Yeah, right on, man. Thank you so much. Okay, well, a little bit late today, but thank you all for being here. I play SPX some, but I don't like it. Nobody should trade SPX, I mean, I know Flips is good at it, but like SPX was literally designed for big money to extract money from retail and to hedge their portfolios. And so, it's important to remember that 9 out of 10 times people lose more on SPX than they make on SPX. And you can do a very similar thing with SPY, same amount of money, same returns, all of that stuff. If you just know how to, finesse those contracts a little bit and learn about the Greeks and understand what they're showing you. And you can do very, very well on SPY. There's a reason that all of the best traders on the planet trade SPY, and the ones who don't understand it call it gambling. It's the most liquid thing in the market for a reason. Oh yeah, OR is opening range. And for me, it's just the highest high and the highest low or the lowest low in the first hour and a half of the day. That's why I always try to post it right when I post those charts first thing in the morning at 8 o'clock, 11 o'clock Eastern. That's just when it's been set. So that's when I try to post it. Okay, right on, everybody. Thank you so much. Awesome questions. You guys are the best. And we will see you tomorrow. Make sure you trade safe. Let me know if you hit any of those Apples, AMDs, Amazons we talked about, and have a great night.